Hello and welcome to the Life of a Digi-Preneur channel. My name is Christina Kiss and today we'll be covering episode 3 of the Get to Maximize Your Business Tax Deductions, in which we'll be covering again TurboTax and the vehicles section of it. So if you own a vehicle for your business, this is where you want to pay attention because you can deduct some of those costs. So without further ado, let's dive into it.
Hello everyone, so today we will be going through the vehicles part of TurboTax for our business deductions, and I have just logged into my account and we are going to go pick up where you left off. Alright, so this is my test account. Just gonna click continue, don't add max. Okay, so we have this one here started, and we're going to go skip for now, continue, and there we go. So you see that here you will have everything that you have put as a startup expense in the prior video. Again, if you want to check that out, I will give a link in the description for you to do that if you haven't done it yet. So once you have all of the startup costs in place, you can go ahead and start the vehicles part. So now it'll ask you, do you own a car or a truck for your insert business here work? If you did, you might be able to deduct certain expenses related to it. If you have multiple vehicles, we'll ask about them one at a time. So if we go here at what kind of vehicles expenses can I deduct, it'll pull up this. So really quickly, ordinarily expenses related to use of a car, van, pickup, or panel truck for business can be deducted as vehicle expenses. Use of larger vehicles such as tractor trailers is treated differently and is not part of this section. Some examples of business-related vehicles examples include miles driven for business, new tires, repairs and maintenance, gas and oil changes, insurance registration and license fees, lease payments, or depreciations. There are two ways to claim business-related expenses: actual expenses or the standard deduction. When you do your taxes with TurboTax, we'll ask for the types of vehicle expenses you had and let you know which way will get you the best deduction. So for my case, I can't deduct everything that I use the car for as a business deduction. Why is that? Because I still drive to my day job with the same car. But what I can deduct for it is the time that I had to drive to the airport for my business trip and the parking fee for that and the gas all the way back. I can't deduct any new tires, repairs, or maintenance because my car hasn't broke down on the way to the airport or back from. Oil changes have not been needed, and I'm not quite sure how I can deduct insurance, registration, and license fees just for that. So, I mean, insurance just for that doesn't make sense to deduct it. So for now, I will not do that. I'll just leave the insurance, registration, and license fees as my own expense. I will ask my CPA if I can do that, but I'm pretty sure he or she will say no. So I don't currently own a car or I don't currently lease a car. But if you would lease a car for your business, be sure to put those payments in here. Now, what if I use more than one vehicle? It's common to use more than one vehicle for business-related reasons. It's possible you sold or traded in an old vehicle for a new one, or you could have more than one that you used at the same time for your business. If you use more than one vehicle, we'll enter them one at a time, starting by entering one, and we'll get to the rest later. I think that's pretty straightforward. I do not own two cars that I use for this, so this will not apply to me, but I'll probably put two cars in this example for the people that do. Okay, so what if I drove a short-term rental? Renting vehicles is very common in the rideshare industry, drivers where drivers might rent a different car each month or week. It's also used in other industries as well. This section will ask about vehicles that you owned and their related expenses. If the only vehicles you used for this work were rented, select No here. And still claim your car rental expenses like rental payments, gas, repairs, and maintenance, if any, as equipment rental expenses in the car and equipment rental section. If you also own a vehicle that you use for this work, you can enter info related to that vehicle and its expense here. Again, I think that's pretty straightforward. So I'll say yes here. Okay, so he'll ask you make, model. I'll just put in the same what says here in the example. Let's see. So what if I use more than one vehicle? I think, yeah, it pops up the same thing it says. We'll get to that later. So put in one at a time. So we agree that I'm going to put in two cars minimum just for the sake of an example. And here you have the type of vehicle. So here, if it's an auto, like your daily car, then I would put this one. You have light truck, van, SUV, truck or van, heavy SUV, heavy truck over 14,000 pounds, truck, tractor, over the road use. So let's say I have, this is an auto. What's my vehicle type? If you don't know, here are some examples. Why do we need this information? It's so we can calculate the depreciation on your vehicle if you choose the actual expenses method. You can find the empty curb weight of your vehicle by searching the internet for the year, make, and model of your car. Keep in mind that additional options will add to this weight. Here are the curb weights for a few popular cars and truck models. So they give you some examples here. If you have one of these, it'll be around here. Okay. When did you start using this car for vehicle work? Let's see, learn more. Okay, enter the date that you first started using this vehicle for your business, which is not necessarily the date you acquired the vehicle. It's okay if the date you start using the vehicle for work was in another tax year. Example, Beth bought a new car in November 2018, but she didn't start using it for work until February 15, 2019. She should enter February 15, 2019. Example, Lauren launched her business in March 2016, but she didn't start using her personal car for business until April the 3rd. She should enter April the 3rd in the box. Josh bought a new pickup truck in January 2017, but did not start using it for business until around May 15. He should enter May 15, 2017. And the last example, Mark leased a car to drive clients around for his new real estate business on August the 1st, 2017. But he took his first client on a house tour on August 15, 2018. He should enter August 15, 2018. I think that's pretty straightforward. I'll just put it just for the sake of this example. Let's say just like that. or you stop using this vehicle here. And I'll close this out, continue. Okay, so the owner, now you can either put I own it, I lease it, or this vehicle is mine. Now I'm familiar with these two. I'm just going to go with this vehicle is mine and read what's here. If you made payment on a vehicle but it's still not in your name or your spouse's name, you're not considered the owner for tax purposes. In this case, you can't claim the standard vehicle deduction. However, you can still claim your actual vehicle expenses like gas repairs and maintenance. We'll walk you through all these allowable expenses you can claim for this vehicle. All right, so I'm guessing that this is the case where you are buying some car from a dealership, but the title is still not transferred over to you. So I'm thinking that this vehicle isn't mine, would fall under that category, because, well, actually, let's see what I lease a vehicle is. Leasing includes traditional vehicle leases, which actually last for 36 months. In this case, you don't actually own the vehicle at the end of the lease. You have the option to turn it in and to decide to purchase the vehicle. This is usually done through a dealership, and you are responsible for the vehicle maintenance. The car must be driven 50% or more of the time for business purposes, and you must maintain records. Only the business portion of expenses are deductible. The actual cost method, not the standard deduction, must be used to calculate driving deductions and to deduct the cost of the lease payment. Keep in mind that a higher leased vehicle may be subject to an inclusion amount or reduction in the deduction for the lease cost. So it's giving you here where to go and read more. For tax purposes, leasing does not include short-term leases where you turn the car in after a much shorter period of time, usually less than 12 months. Okay, so that's strictly for leases. That's strictly if I own it. And for me, this is like the case if I have my car and I'm paying to eventually own it through a dealership. I think that I would go in here. So what if I drove a short-term lease or rental? Renting or leasing vehicles is very common in the rideshare industry, where drivers might rent a different car each month or week. It's also used in other industries as well. This section will only ask about vehicles that you owned and their related expenses. Don't enter info related to any rented vehicles here. You can still claim your car rental expenses like rental payments, gas repairs, and maintenance, if any, as equipment rental expenses. We'll ask about them later in the car and equipment rental section. If you needed to delete a rented vehicle you've already added to this section, select continue until you get to your vehicle summary page. You can delete the rented vehicles from there. All right, so rented goes somewhere else. I'll say I own this one. This Honda Accord available for personal use in 2019. We just need to know if the vehicle was available to you for personal use, trips and errands that weren't for work. Yes, it was available for personal use. Did you have another vehicle available for personal use? Let's say, no, I didn't. So in this scenario, I'm going with one car that I've used both for work, for my day-to-day work, and for my business. Okay, now what if I didn't document my miles? You can estimate your mileage. The IRS requires keeping a mileage log. Consider using your calendar to recreate a log from that. All right. Did you keep track of the miles you drove for your graphic design work in this Honda Accord in 2019? This includes a mileage log spreadsheet, tracking app on your phone, or something similar. So let's say, no, I didn't. Why do I need this? If you plan to deduct your vehicle expenses, the IRS requires you to have proof to show how many miles you've driven. This could include a written mileage log book, a spreadsheet showing your mileage, or a mileage tracking app on your phone. We don't ask you to provide this, but it's a good idea to keep records of your mileage and expenses. Okay, what if I didn't keep track of my mileage? Yeah, this is the same as before. Okay, so let's say no, I didn't. How do you want to enter your mileage for this Honda Accord? The way you enter it won't impact your deduction. We just need the mileage to do that math for you. So you can either enter the total mileage you drove in 2019. First, enter the total miles you drove for any occasion in 2019, including personal work and commuting miles. Then you enter the miles you drove just for your work. So what they'll do in this method is that, let's say, I'll just use the example. Let's say you entered 10,000 and 10,000 total mileage. Then you enter another 8,000 that you drove only for your business purposes, right? So what they will do is that they'll deduct, they'll subtract, and they will know exactly how much you drove for your business 2019. Or you can go here and say, I'll enter my beginning and ending odometer readings for 2019. So enter the miles you drove for your graphic design work. Beginning mileage, let's say, I don't know. Let's say it was new, and ending mileage, let's say it was 10,000, right? All right. So again, they will calculate here. Now let's see, how do I figure out my mileage? In order to get the vehicle deduction, make sure you have documentation of all your work-related mileage for 2019. Your total work mileage can include travel between work sites, work-related errands, driving to and from the airport or train station, or other work-related car travel, driving to visit customers or clients. So for me, driving to and from the airport apply here, and this is what I will actually enter for my actual account. Since this is only a test, I just put in the values in the example just for example purposes. Okay, what if I use more than one vehicle? It's common to use, okay, this is the same thing, just go one at a time. What if I don't know my mileage? Again, we already saw this. So let's say I'll do this one. I'll do first one for this one, and I'll do the second one for the second car. So let's go on. Were four or more other vehicles also used for this work while you were using this one? The IRS consider it a fleet when you have 5 or more vehicles in service at the same time. This tends to apply if you have workers to drive your vehicles. So here, having a fleet of vehicles, the IRS considers it a fleet of vehicles when you have 5 or more vehicles in service for the same work at the same time, and requires that you enter your actual expenses when claiming your deductions for each vehicle in the fleet. Fleets are more common with businesses that have people who work for them and who drive the business's vehicles, whether they're owned or leased. Each vehicle doesn't need to be used every day in order for it to be considered part of your fleet. They just need to be available for use for the same work. So example, Alice started the year with 4 vehicles for her landscaping business. In April, she sold one truck and bought a newer one. She can use the started mileage rate for all of the 5 trucks she owned this year, since they weren't all in service at the same time. She would respond to this question by selecting no, 4 or more vehicles were not used for this work at the same time. Another example is Brian owns 5 cars that were used for his real estate business. People who work with him use 4 of the cars, and he uses one of them to travel to his clients. This is considered a fleet, so Brian cannot use the standard mileage rate for any of these 5 cars. He would respond to this question by selecting yes. 4 or more other vehicles were used for the same. So I'm going to click no because we're only going to add 2 cars. Alright, so based on the mileage you drove, your standard mileage deduction for this Honda Accord is this much. Okay, standard is usually better if you drove a lot of miles. Actual expense might get you a bigger tax break if you had higher repair, gas, and insurance expenses. Okay, and which is better for me? Most people use the standard mileage. Okay, you simply total your business miles for the year and apply the IRS mileage rate. For 2019, the standard mileage rate is 58 cents per mile. If you choose the standard method, we'll calculate your mileage tax rate for you. An example, John drives 6,000 miles a year for his graphic design work. His car is in good shape, so he doesn't have any expenses for repairs or maintenance. Taking the standard mileage rate would give John the best tax break. Okay. So it says standard, so we'll click on standard. How's this calculated? Okay. The standard mileage rate is a rate of cents per mile. It's part of the method that lets you claim the miles you drove for this work. This method involves multiplying the miles. Okay, so it's the same thing. Different example, in 2010, Emily drove the car 1,000 miles for her self-employed job as a personal assistant. In 2014, when she first reported this car use, she used the standard mile deduction to take a deduction. This means she can use this rate now, and her deduction is calculated like this. Okay. And I think we already went through this. Yeah. So I'll just click on this and click continue. Before we wrap, did you have any of these expenses for this Honda Accord? Enter the dollar amounts below or the continue to skip. Parking fees for work. Let's say I have 300. Toll fees, let's say I have 50 bucks. Transportation to work. Local transportation costs are expenses related to travel within the area of your business. Only enter expenses here that you have not reported elsewhere in your return. For example, car rental expenses that you incur while your vehicle is being repaired. Trailer you rent to transport marketing displays in your business. Cost to take a bus, subway, train, or trolley in order to conduct businesses. Okay, so here what I would put, for example, if you have your car that's in the shop and you needed to rent or you needed to take the subway or a bus, meanwhile this was repaired, I would put those costs here. A trailer you rent for transporting marketing displays, again, you can put those expenses here. And I think that this is where my CAPFR would go for the seminar that I've been through last year. So I would actually put those in here. Now, property tax included in your car registration fees. The property tax of the license or registration fee is based on the value of the car. Contact your motor state vehicle department to find out what portion of the fee is property tax. Not all states have this. Some states charge a license or registration fee only, and there's no personal property tax portion. If your state has a personal property tax portion to the license or registration fee, it would be listed separately on the vehicle registration notice you receive. Enter the total of your property tax, and TurboTax will figure out how it should be divided between any businesses and personal use. If you use this car for more than one business, you will need to allocate the property tax to each business. You'll also need to enter the personal portion under property tax in the deductions and credits section. Don't enter the amount for each business in the property tax box on the before we wrap up. Did you have any other expenses to your vehicle screen? If you use actual expenses, enter it with other expenses on the let's get your actual expenses screen. If you are using the standard mileage method, enter it with your work-related parking fees on the before we wrap up. Did you have any other expenses screen? Okay, so for me this is pretty straightforward. What I need to do in my personal case, I do need to ask if I have any property tax portion to my registration for my car last year. So I need to hold off on including anything here before I actually talk to the DMV. Okay, and total interest paid on your car. The interest paid refers to the interest portion of your car payments. If you took out a loan to pay for your car, you can ask your lender for the total amount of interest you paid in 2019. Since we already figured out the percentage of miles that you drove for this work, we'll use that percentage to calculate the amount of interest you can claim on your taxes. So I think that this only applies that if, as they say, if you took out a loan to pay for your car, the interest part of it will go in here. So with that being said, I'll click continue. Okay, so we have 4,000, almost 5,000 dollars for this one. Now I click continue. Let's say I have another one. What's the, what was the next one? Let's put an, I have no idea if this is a light truck, van, or SUV, but let's say so. Again, this is only an example. You put the actual car make and model. As we agreed in the beginning, I will do this for 2 cars, and I'm just putting random stuff in there, but you make sure you actually put your information. So again, let's say this I started using a month after. So let's say I leased this vehicle. We just need to know if this vehicle was available for you for personal trips that weren't for work. Let's say no to this one. So for this one, I'm going with the scenario in which we only use this car for business-related work, right? So for business-related trips, I only use this car. You keep a track of your miles you drove. Let's say I did. And let's say I didn't because I didn't use it for personal reasons. And I said that we're going to do it like this. So enter the miles you drove. Let's say with this, I drove more because it was only related to this one. So let's say I did this one. The beginning mileage was, let's say, 1,000. The ending mileage is 10,000, right? Okay. Correct, because this plus this is 11,000, not 10,000. Math, guys, math. So 4 more, no, we do not have 4 more cars. Okay, so for this one, again, standard applies, so we'll take the standard one. Let's say, did we get any parking fees for this one? So this one we used more. Let's say we got 400 for this one. Tolls, let's say we got 100 for this. So this I'm leasing, but I did not have, let's say I did not get a loan to pay it off. So I'll just put it like this. All right, so this would be this much. Continue. So let's say that I have added all of the vehicles for this one. And there we go. And that's how you add your vehicles part for TurboTax deductions. Next, we will go for home office in the next episode. I hope that you found value in what I had to teach you today. To subscribe and click the notification bell in order to be notified for the upcoming videos. With that being said, thank you again for watching and have a great day.